Welcome back to Billionaire Mindset, where we dive deep into the strategies that build real wealth, not just hype. In our last episode, we talked about why investing is a non-negotiable if you want financial freedom. Today, we're going one level deeper. We're breaking down two types of investments: the ones that make your money work for you without your time, and the ones that need your time and energy but can bring faster, higher returns. If you've got money sitting in a savings account earning less than inflation, this video is for you. Let's start with simple and passive investments. These don't need you to watch charts every day or constantly manage your portfolio. They're the foundation of long-term wealth: steady, reliable, and scalable. Bitcoin is the first, most secure, and most widely adopted cryptocurrency. It's designed to be scarce. Only 21 million coins will ever exist, making it a digital hedge against inflation. You can buy and hold Bitcoin through platforms like Coinbase or Binance, or store it securely in a cold wallet. It doesn't require active trading. It just requires time and conviction. Next, gold and silver. These have been stores of value for centuries. When the market is unstable or currencies lose value, people turn to precious metals. You can buy physical gold and silver in bars, coins, or invest in digital alternatives like ETFs that track their price. Silver tends to be more volatile and affordable, while gold remains a strong long-term hedge. Now let's talk about ETFs, exchange-traded funds. These are investment vehicles that let you invest in a collection of assets, like stocks or bonds, without picking them individually. For example, VOO tracks the S&P 500, meaning you're investing in the 500 largest companies in the US. You get instant diversification and lower risk. ETFs are perfect for people who want broad exposure to the market without having to do all the research themselves. Dividend stocks are another powerful form of passive income. These are shares in companies that pay you a portion of their profits just for owning them. Companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble have been paying dividends for decades. This means consistent quarterly income, and when you reinvest those dividends, the compounding effect can grow your wealth significantly over time. Then we have bonds and treasury bills. Bonds are essentially loans you give to a company or government, and in return, they pay you interest. U.S. Treasury bonds are considered among the safest investments in the world. Corporate bonds carry more risk but often pay higher interest. Treasury bills are short-term government securities, often maturing in under a year. These are low risk and ideal if you want to preserve your capital while still earning a small return. So these are your simple, passive options. Now let's explore the second category: investments that require your time and energy. First up, altcoins. These are any cryptocurrencies that aren't Bitcoin, like Ethereum, Solana, Avalanche, or Cardano. Unlike Bitcoin, which is considered a digital store of value, altcoins are often tied to specific projects, like smart contracts or decentralized finance. They can explode in value, but they can also crash overnight. That's why you need to research each project. Read the white paper, analyze the tokenomics, evaluate the team, and follow community development. It takes work, but the rewards can be huge. Another option, individual stocks. Instead of investing in an ETF, you can choose to buy shares in a specific company, like Apple, Tesla, Amazon, or Nvidia. This means you need to dig into financial reports, track news and earnings, and study market trends. It's more time-consuming and riskier than buying a diversified fund, but if you choose wisely, the returns can be phenomenal. Now let's talk about real estate. This is one of the most popular ways to build wealth, and for good reason. Real estate offers cash flow through rental income, long-term appreciation, and even tax benefits. But it's far from passive. You need to visit properties, negotiate with sellers, screen tenants, and deal with maintenance. You can buy and hold, rent on Airbnb, or flip houses for profit. But every method requires hands-on effort and strategic thinking. Another high-risk, high-reward strategy is angel investing. This means investing in early-stage startups before they go public. You're betting on the future success of a business, and if that business takes off, your investment can multiply 10 times or even 100 times. But most startups fail, so So you need to evaluate founders, business models, market size, and scalability. It's not for everyone, but it's a favorite move among the ultra-wealthy. Finally, we have flipping assets, like watches, classic cars, or even NFTs. These require niche knowledge. You need to understand market trends, rarity, demand, and timing. Done right, flipping can be a lucrative side hustle, but it's not beginner-friendly. So here's the takeaway. If you want to build wealth, start by putting your money to work in passive investments like Bitcoin, ETFs, dividend stocks, and bonds. Once you've built a foundation and gained some experience, start exploring the more active strategies, like altcoins, real estate, and startups. Every investment has risk, but the biggest risk of all is doing nothing. Thanks for watching. If you found value in this video, hit the like button, subscribe to the channel, and comment below which investment strategy you're going to start with. This is Billionaire Mindset. See you in the next episode.